Good evening, everybody. I'm Stacy Scott, and I'm here with Graham Wickham, President and CEO of Wickham Financial and Insurance Services, and we are back with you again with our weekly wrap-up. Graham, it looks like we had a pretty good week in the market last week. Definitely something to be thankful for. What do you think you can share with us about what happened last week?
Yeah, thank you, Stacy, and I hope all of our listeners had a great Thanksgiving with their friends and family, and hopefully a safe one. I know we did. It was a modestly higher market last week, I think spurred on from some of the minutes that came out from the Federal Reserve Open Market Committee, maybe making some comments or statements that the pace of interest rate hikes might be slowing a bit. So we saw the S&P up about 1.5%, the Russell 2000 up about 1%, and NASDAQ not quite up 1%, but up about 0.7%. Now, two main sectors kind of led the market last week, and that was basic materials and utilities up about 3%. But we did see oil slide with the possibility or rumor that OPEC might increase production. So we saw oil or crude oil slip about 4.5%. I think some interesting numbers that came out is that we are starting to see unemployment rates starting to creep up. Jobless claims starting to creep up, so on and so forth. And remember, for our listeners and viewers, that that's one component that the Federal Reserve was looking at, that they wanted to see some weakness. They want to see this unemployment rate increase a bit, causing that pain in the economy. So we are seeing some of that kind of creep through. We think about Black Friday numbers. I think we are about 9.1 billion online sales for Black Friday. That was a record of just over 2% year over year. So strong consumer. They're hitting their credit cards again, though. So we're starting to see that credit card usage move up a bit. Internationally, we're still seeing strong inflation internationally. We did see a strong PPI number from Germany that came out of about 34.5%, so that's really, really strong. But we did see the German government step up to the plate a bit and saying that they're going to help out with some gas bills and whatnot for some of the citizens. China, for the second time in a year, they basically lowered the loan or their reserve requirements to kind of maybe spur the economy or prop up the economy a bit. Because we're still seeing a weakening Chinese economy, which does affect the international markets because they produce and consume so many goods.
Okay, well, Graham, what do you think about maintaining this momentum, this positive momentum? Do you think that's something we will see throughout the end of the year?
I think it is a bit of a tailwind right now. I think the S&P was above 4,000. We haven't seen that in a while. So I think the momentum, the seasonality is in the favor of the market right now. Now, it doesn't mean you're not going to have the market pull back a little bit here or there, kind of digest this kind of big run or nice little rally that we've had coming towards the end of the year. But I think there's strong reason to believe that this market could continue to do well. But we do want to be mindful. I think it's the 13th or 14th when the Federal Reserve is going to meet again. And I think we have CPI numbers that come out the day before they meet. So that will set the tone for the rest of the year as well. And if we continue to see some weakening CPI numbers, inflation numbers starting to weaken, continue to roll over, maybe that gives the Fed some feel goods, if you might, for the holiday season, then maybe they don't have to increase as much, as fast, or as long.
Okay, well, great. Well, thank you so much for that. And thank you to our viewers for joining us today. We do have our monthly webinar scheduled for this Wednesday at noon. So please make plans to join us for that. We do have a really timely topic on end of year tax planning scheduled. So you'll not want to miss that. And hope everyone has a great week. And we will look forward to seeing you next week on our weekly wrap-up. Thanks so much.
Take care.